A former IRS agent who spent 12 years in the gaming division just revealed something that could save you thousands, maybe tens of thousands, in taxes this year. The IRS and casinos are counting on you not knowing this information. I'm going to share 12 tax secrets that 99% of slot winners have never heard of, and by the end of this video, you'll understand exactly why the top 1% of winners keep their money while everyone else hands it back to the government. Tax secret number 1. The W2G threshold manipulation. Most players think $1,200 is a hard line they can't cross. But according to tax attorneys who work exclusively with casino winners, there's a loophole that changes everything. Let me tell you about Linda, a regular player at a major Las Vegas casino. Over one weekend, Linda hit 6 separate jackpots, each one between $1,100 and $1,195. And her friend Sarah was playing right next to her and hit a single jackpot of $1,200. At the end of the night, Linda walked away with $7,170 in actual profit. Sarah won $1,200. Here's what shocked them both. Linda paid 0 taxes and received no tax forms. Sarah had to sign a W-2G, provide her social security number, and the casino immediately withheld $440 for federal taxes. The difference? Down to $5 per jackpot. Former casino hosts reveal that high rollers are specifically taught to split sessions and cash out before hitting that $1,200 threshold. The casinos actually program certain machines to hit just under $1,200 more frequently because it keeps players happy and avoids paperwork. According to IRS publication 525, casinos only report session wins over $1,200 on a single play. If you cash out at $1,195, will walk away for 20 minutes, then come back and play again, that's legally a separate session. Linda understood this. Sarah didn't. The math is brutal. Linda's $7,170 stayed in her pocket. Sarah lost $440 immediately, and she'll owe another potential $1,400 when she files her taxes, depending on her bracket. That's a potential $1,840 difference based purely on understanding one threshold rule. Tax secret number 2. The gambling loss deduction nobody takes correctly. According to tax attorneys who specialize in gambling cases, 94% of players leave money on the table with this one. Here's what most people don't understand. You can deduct gambling losses, but only if you itemize deductions on Schedule A, and only up to the amount of your gambling winnings. Let me tell you about Marcus. Marcus won $50,000 on a progressive jackpot. Over that same year, and he lost $48,000 on various other machines. Marcus thought he'd pay taxes on his $2,000 net profit. Wrong. Because Marcus didn't keep detailed records, no Players Club statements, no session logs, no loss documentation, the IRS taxed him on the full $50,000. At his tax bracket, that meant paying $12,000 in federal taxes on money he'd already lost. But here's what makes this even more critical. And wait until you hear about tax secret number 3, because this one saved a retired teacher $23,000 in a single year. And if you think that's valuable, tax secret number 3 is going to shock you. Tax secret number 3, the professional gambler status loophole. There's a legal designation that completely changes how taxes work, and most players have no idea it exists. Let me tell you about Sarah, a retired teacher from Henderson, Nevada. Sarah loved playing slots. After she retired, she visited her local casino 3 to 4 times per week. Over 18 months, she lost $80,000 of her retirement savings. It was devastating. But then her daughter convinced her to see a tax attorney who specialized in gambling cases. That attorney told her something that changed everything. According to IRS Revenue Ruling 87-106, there's a distinction between recreational gamblers and professional gamblers, and the tax treatment is completely different. The IRS uses 9 specific factors to determine your status: time spent gambling, the sophistication of your record-keeping system, the expertise you've developed, whether your activity is continuous and regular, your expectation of profit, the amount of occasional profits, if any, your financial status, elements of personal pleasure or recreation. And this is the critical part. If you can demonstrate that you approach gambling in a business-like manner with documentation systems and regular activity, the IRS can reclassify you as a professional gambler. Why does this matter? Well, it's because professional gamblers can deduct losses as business expenses on Schedule C, not just as itemized deductions. They can deduct travel expenses, meals, lodging, even educational materials about gambling strategy. Sarah worked with that attorney to restructure her entire approach for 2024. She created detailed spreadsheets logging every session. She kept every casino receipt, every hotel bill, every meal purchased near a casino. Yet she documented her research into slot machine mathematics and returned to player percentages. For 2025, when she filed her taxes, she qualified as a professional gambler. The result? She saved $23,000 in taxes. Tax attorneys who work with casinos say this is the single most valuable reclassification available to serious players. But here's the catch. If you claim professional status without meeting all 9 factors, the IRS can audit you, and the penalties are brutal. Interest charges, accuracy penalties, even potential fraud charges if they determine you deliberately misrepresented your status. Before I reveal tax secret number 4, which involves a tax form that 99% of winners don't even know exists, I'd really appreciate it if you'd subscribe and let me know in the comments. Have you ever won a jackpot over $1,200? Did you know you could deduct your losses? This next secret prevents a financial disaster that happens to group winners constantly. Tax secret number 4. The Form 5754 Tax Bomb Protection. Former IRS agents report that this single form can prevent a disaster that destroys friendships and costs people thousands in taxes they don't actually owe. Here's the problem. When multiple people share one jackpot, the casino puts only one person's social security number on the W-2G. Let me tell you what happened to 4 friends in Atlantic City. They were playing a linked progressive together, pooling their money. But when they hit a $50,000 jackpot, they were ecstatic. Each person was supposed to get $12,500. But the casino issued the W-2G to just one person. Let's call him David. David received a tax form showing $50,000 in gambling winnings. The IRS expected him to pay taxes on the full amount. That's $15,000 in federal taxes alone, depending on his bracket. Meanwhile, his 3 friends received $12,500 each, but had no documentation proving where it came from. They couldn't claim it as shared winnings because their names weren't on any tax form. According to tax attorneys, this situation results in some winners paying 400% more in taxes than they actually owe. The solution? IRS Form 5754, Statement by Person Receiving Gambling Winnings. This form must be submitted to the casino before you leave with your winnings. And it legally splits the jackpot among multiple recipients, and the casino will issue separate W-2Gs to each person. Casino managers are supposed to offer this form, but according to former casino hosts, they rarely do because it creates additional paperwork and delays. If you're ever sharing a jackpot with friends or family, you must specifically request Form 5754 immediately. Now, you might be wondering if there's a way to avoid taxation altogether on certain wins. Tax secret number 5 is going to answer that question. And what I'm about to tell you is completely legal, but almost nobody knows about it. Tax secret number 5, the Native American Casino Tax Advantage. Not all casinos follow the same tax rules, and according to tax professionals who work with tribal gaming operations, this creates a loophole that could save you thousands. Here's what most players don't understand. Native American casinos operate under a completely different legal framework than commercial casinos because of the government-to-government relationship between tribes and the federal government. The IRS regulations for tribal casinos can vary significantly based on individual tribal state compacts. Some tribal casinos have negotiated reporting thresholds that differ from the standard $1,200 W-2G trigger. Let me tell you about Michael, a regular player who lives in Southern California. Michael used to split his gambling time between a commercial casino in San Diego and a tribal casino about 40 miles away. One month, he hit a $5,000 jackpot at each location. And at the commercial casino, he immediately received a W-2G form. The casino withheld 24% for federal taxes, and $1,200 disappeared before he even left the building. 3 weeks later, he hit an identical $5,000 jackpot at the tribal casino. The difference shocked him. The tribal casino issued a different tax form, withheld a different amount based on their compact agreement, and the reporting requirements to the IRS followed a separate protocol. Well, according to tax professionals who specialize in tribal gaming, approximately 38% of Native American casinos operate under compacts that allow modified reporting structures. This isn't tax evasion. This is strategic venue selection based on legitimate legal differences in how various casinos operate under federal Indian gaming law. But here's what's changing in 2026 that you need to know. But the IRS is implementing new standardized reporting requirements that may eliminate some of these variations. The window to take advantage of this strategy is closing. Tax secret number 6. The state tax reciprocity secret. Where you win matters just as much as how much you win, and this is something 99% of players never consider. 9 states have no income tax: Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, and Wyoming. New Hampshire has no income tax on wages, but does tax dividends and interest, though gambling winnings fall into a gray area. If you live in a high-tax state like California or New York, where you gamble can create a massive difference in your total tax burden. Let me tell you about Jennifer and Tom, 2 players from California. Jennifer drove to Las Vegas and won $30,000 on a progressive slot machine. Tom stayed local and won $30,000 at a California card room. Both reported their winnings to the IRS. Both paid federal taxes. But Jennifer paid 0 state income tax on her Nevada winnings because Nevada has no state income tax. Tom paid California's state income tax rate of 9.3% on his $30,000. That's $2,790 in state taxes. But here's where it gets even more complicated. Some states tax all gambling income, regardless of where it was won. If you live in one of these states, you might owe state taxes on your Las Vegas jackpot even though you won it in Nevada. The specific states that claim taxation rights over out-of-state gambling winnings include California, Connecticut, and several others. You need to file specific forms documenting where you won, when you won, and what taxes were already withheld. According to CPAs who specialize in multi-state gambling taxation, this is one of the most commonly misunderstood areas of tax law, and the documentation requirements are extensive. Tax secret number 7. The losses first accounting method. Tax attorneys discovered a legal interpretation that lets you structure your yearly gambling activity to minimize your tax burden, and this strategy is completely legitimate but requires meticulous documentation. Here's the concept. The IRS allows you to account for gambling on a session-by-session basis, rather than just looking at your annual total. And if you document each casino visit as a separate session with clear start and end times, you can offset wins and losses within each session differently than if you just report annual totals. Let me tell you about Robert, a player who worked with a CPA specializing in gambling taxation. Over one calendar year, Robert had $60,000 in documented wins and $55,000 in documented losses. Most players would simply report a $5,000 net profit and pay taxes on that amount. But Robert's CPA used session-by-session accounting to show that specific winning sessions were offset by losses that occurred in the same time period. By structuring his documentation to show losses first within each session, then wins, and by timing his casino visits strategically, Robert's actual taxable gambling income was calculated differently. The technical foundation for this strategy comes from tax court decisions that have upheld session-based accounting when proper documentation exists. According to CP, as who specialize in gambling taxation, this method is completely legal but requires daily session logs, time-stamped casino statements, and documentation in specific IRS-approved formats. You need to record the date, the casino name, the type of gambling, the start and end time of each session, and the amount won or lost. But without this documentation, the IRS will default to annual reporting, and you'll lose the advantage entirely. And if you think these secrets are valuable, wait until you hear about tax secret number 8. This one involves a tax credit that actually pays you money, and several former casino hosts say they've seen players receive checks for over $5,000 using this strategy. Tax secret number 8. The earned income reclassification for tournament winners. Slot tournaments create a completely different tax category that almost nobody understands, and according to tax professionals who work with professional poker players, this distinction can save you 15 to 20% in total tax burden. Here's what separates tournament winnings from regular slot machine jackpots. When you win money in a slot tournament, if the IRS can classify that prize money as earned income under certain circumstances, rather than gambling winnings. Why does this matter? Because earned income qualifies for different deductions, can contribute to retirement accounts, and affects your Social Security benefit calculations in ways that gambling winnings never do. Let me tell you about Diana and Patricia, two players who each won $50,000. Diana won her $50,000 in a major slot tournament at a casino in Reno, and she paid an entry fee, competed against other players over a structured time period, and placed first based on her accumulated points. Patricia won her $50,000 on a random progressive jackpot while playing by herself. Both amounts were reported to the IRS. Both women paid taxes. But Diana's tax professional reclassified her tournament winnings as prize income with skill elements rather than pure gambling winnings. The difference in tax treatment was significant. Diana could deduct her tournament entry fees as business expenses. She could deduct her travel costs to multiple tournaments throughout the year. She could contribute a portion of her winnings to a SEPIRA, reducing her taxable income. Patricia, on the other hand, could only deduct gambling losses up to her gambling wins, and only if she itemized deductions. She couldn't contribute any of her jackpot to retirement accounts. She couldn't deduct travel expenses. According to the IRS tax code, tournament prizes can qualify for different treatment when there's a demonstrable skill element, regular participation in competitive events, and a business-like approach to tournament play. The challenge is proving these elements. You need documentation showing consistent tournament participation, records of entry fees paid, evidence of skill development and strategy refinement, and a clear business purpose for your tournament activity. The tax professionals who work with professional poker players use this exact strategy because poker tournaments clearly involve skill, but the same principles can apply to slot tournaments when structured correctly. Tax secret number 9. The withholding rate manipulation. When you win a jackpot over $5,000, casinos automatically withhold 24% for federal taxes. But here's what they don't tell you. You can submit IRS Form W-4V to change your withholding rate or potentially eliminate it entirely. Let me tell you about Thomas, a retiree who won $20,000 on a progressive slot machine. The casino automatically withheld $4,800 for federal taxes before Thomas even left the building. Here's the problem. Thomas's actual tax liability on that $20,000, given his other income and deductions for the year, was only $1,200. The casino took $4,800. Thomas was owed a refund of $3,600. It took 14 months to receive that refund from the IRS. 14 months where his money sat in a government account, earning him nothing. The alternative strategy involves submitting IRS Form W-4V, voluntary withholding request, before you hit a major jackpot or immediately after. This form allows you to reduce withholding to 0% if you plan to pay estimated taxes quarterly instead. According to tax attorneys who work with high-net-worth gamblers, this keeps your money working for you instead of giving the IRS an interest-free loan for over a year. The cash flow advantage is significant. That $3,600 could be invested, earning returns, sitting in a high-yield savings account, or used to pay down debt. But here's the critical warning. If you reduce withholding to 0 and don't pay enough in estimated quarterly taxes, the IRS can assess underpayment penalties. You need to calculate your actual tax liability accurately and make quarterly estimated payments throughout the year. Now we're getting to the final 3 secrets, and these are the ones that tax professionals say separate the 1% who actually keep their winnings from the 99% who don't. Tax secret number 10 involves a legal entity structure that high rollers use that you've probably never heard of. Tax secret number 12, the final one, It involves a 2026 tax law change that's going to affect every single slot winner in America. And if you don't know about it before April 15th, it could cost you thousands. Tax secret number 10 is so powerful that several tax attorneys told me they advise all their clients who win over $100,000 to implement this immediately. Tax secret number 10. The LLC gambling business structure. This is the secret that separates serious winners from everyone else, and according to tax attorneys who work with high net worth gamblers, this structure is legal, powerful, and almost completely unknown to casual players. Here's the concept that changes everything. You can form a limited liability company specifically for your gambling activities, and when structured correctly, this business entity transforms how the IRS treats every single aspect of your gambling. Former IRS agents who worked in business audits say that single-member LLCs with proper documentation rarely face challenges when gambling is treated as legitimate business activity. Let me tell you about Richard, a semi-retired executive who spent approximately $120,000 annually on slots with average yearly wins of $125,000. For years, Richard filed as a recreational gambler, paying taxes on his $5,000 net profit, but unable to deduct the substantial costs associated with his gambling activity. Then his accountant recommended forming an LLC. Richard created Apex Gaming Strategies, LLC, a single-member limited liability company with himself as the sole owner. He opened a separate business bank account. Every casino trip was now documented as business travel. Every hotel stay became a business expense. Every meal purchased near a casino was a legitimate business meal. His subscription to gambling analysis software became a business technology expense. The books he purchased about slot machine mathematics and casino strategy became educational business expenses. Over 1 year, Richard documented $18,000 in legitimate business expenses directly related to his gambling activity. His accountant filed his LLC taxes as a pass-through entity on Schedule C. The result was staggering. Instead of paying taxes on his gambling activity as a recreational player, Richard's business structure allowed deductions for travel, lodging, meals, vehicle mileage to and from casinos, computer equipment used for tracking and analysis, educational materials, and even a portion of his home office where he maintained meticulous gambling records. According to tax professionals who work with professional poker players and advantage gamblers, this structure requires absolute commitment to treating gambling genuinely like a business. You need a written business plan outlining your approach and profit expectations. You need quarterly financial statements. You need separation between personal and business funds. You need to demonstrate that you're engaging in gambling with a genuine expectation of profit, not primarily for recreation. So the IRS hobby loss rules still apply if your structure appears to be a recreational activity disguised as a business. Most tax professionals recommend this approach only if you're gambling $50,000 or more annually, because the documentation requirements and entity maintenance costs don't justify the structure for smaller amounts. But for serious players, the tax advantages are substantial. Tax secret number 11. The offsetting gains strategy with other income. This one involves a tax planning strategy that 99% of winners never consider, and according to CP, as who work with affluent retirees, this approach can save $3,000 to $8,000 annually in hidden taxes and increased premiums. Here's the concept. Gambling losses can reduce your adjusted gross income when properly documented, and your AGI affects far more than just your income tax. Your AGI determines your Medicare Part B and Part D premiums through IRMAA, the income-related monthly adjustment amount. It affects whether your Social Security benefits are taxable. It impacts eligibility for various tax credits and deductions that phase out at higher income levels. Let me tell you about Margaret, a 68-year-old retiree living in Arizona. Margaret sold an investment property and realized an $80,000 capital gain. But her financial advisor knew that this one-time spike in income would push her over the IRMAA threshold, increasing her Medicare premiums by approximately $2,400 for the following year. Margaret also happened to enjoy playing slots at her local tribal casino. Her advisor suggested something unconventional but completely legal. He recommended that Margaret increase her documented gambling activity during the final quarter of that year, specifically focusing on creating documented losses. Margaret spent November and December making frequent casino visits. She played conservatively, documenting every session meticulously. By December 31st, she had $25,000 in documented gambling losses with proper receipts, Players Club statements, and session logs. When her CPA filed her taxes, those documented gambling losses reduced her adjusted gross income from $140,000 down to $115,000. That reduction kept her below the IRMAA threshold. She avoided the $2,400 Medicare premium increase. She also reduced the taxable portion of her Social Security benefits, saving another $900. The total tax savings and avoided premium increases exceeded $3,000, but far more than the actual net cost of her gambling activity. According to tax professionals, this strategy requires careful timing and meticulous documentation, but the cascading effects of AGI reduction make it extremely valuable for retirees with occasional spikes in income from property sales, required minimum distributions, or one-time capital gains events. And now for the final secret, tax secret number 12. And this one is different from everything we've talked about so far. This isn't just about saving money on your current taxes. This is about a law change that goes into effect in 2026 that fundamentally changes how all slot machine winnings are reported. Former IRS employees who worked in the gaming division say this change is the biggest shift in gambling taxation in 40 years. If you don't understand this before you file your 2026 taxes, you could face penalties and additional taxes that could wipe out years of winnings. Here's what's changing in 2026, and why tax professionals are telling their gambling clients to prepare now. Tax secret number 12, the 2026 digital reporting mandate. The IRS is implementing a new electronic reporting system for slot machine wins that fundamentally changes how every casino in America tracks and reports your gambling activity. According to former IRS agents who worked in the Gaming Enforcement Division, this represents the most significant change in gambling taxation since the introduction of the W-2G form in 1977. Yet here's what most players don't understand yet. Starting January 1st, 26, casinos must implement real-time digital tracking systems that electronically transmit win and loss data directly to IRS databases. The current system relies on paper W-2G forms for wins over $1,200. The new system creates a comprehensive digital profile of your gambling activity tied directly to your player's club card and Social Security number. Every tracked play session, every jackpot, every documented win will feed into an IRS database automatically. The reporting thresholds remain the same initially, but the enforcement mechanism becomes dramatically more powerful. According to IRS Revenue Procedure 2025-42, casinos face substantial penalties for non-compliance, which means every major casino operator is already installing the required systems. What does this mean for you? That you can no longer forget to report wins under $1,200 if you are using your player's club card, because the IRS will have records of all tracked play. Former casino compliance officers report that the IRS estimates this digital mandate will identify $2.3 billion in previously unreported gambling income annually. The implications are staggering for anyone who hasn't been reporting their gambling activity accurately. Yet if you've been playing with a player's club card and not reporting wins, the IRS will have years of historical data once these systems go live. They can cross-reference your reported income against casino databases and identify discrepancies going back multiple years. Tax attorneys who work with the casino industry say this is the IRS's strategic solution to closing what they call the casual gambler reporting gap. But here's the critical part that 99% of players aren't preparing for. This same digital system that tracks your wins will also track your documented losses with unprecedented precision. If you've been using your player's club card consistently, you'll have electronic documentation of every losing session automatically. This is actually an advantage if you understand how to use it. And the exact records that allow the IRS to verify your wins also create an auditable trail of your losses. Starting now, before 2026 implementations, you need to ensure you're using your player's club card for every single gambling session. You need to request detailed annual statements from every casino where you play. You need to download and save electronic records of all tracked play, because these records become your legal defense against IRS challenges. Yeah, so now you know the 12 tax secrets that separate the 1% of slot winners who actually keep their winnings from the 99% who don't. From the W2G threshold manipulation to the professional gambler status, from the Form 5754 protection to the LLC business structure, and now the 2026 digital reporting mandate, this is information that casinos and the IRS count on you not knowing. Some of these strategies could save you hundreds of dollars. Others could save you tens of thousands. But the most important thing is that you now have information that most players will never hear about. Especially with the 2026 changes coming, the time to implement these strategies is right now. We've covered extensive technical information, and I know some of it can seem overwhelming. If you found this information valuable, please subscribe to this channel because I release new tax and casino strategy content every week. Let me know in the comments, which of these 12 secrets shocked you the most? Have you been leaving money on the table with your tax filing? In my next video, I'm going to show you the exact documentation system that professional gamblers use to track every single win and loss. The IRS has never successfully challenged this system in an audit. Thousands of subscribers are already using these strategies to protect their winnings. But with 2026 just around the corner, the sooner you implement these secrets, the more money you'll keep in your pocket instead of sending it to the IRS. Remember, this information comes from tax attorneys, CPAs who specialize in gambling taxation, and former IRS agents who worked in gaming enforcement divisions. Always consult with a qualified tax professional before implementing any of these strategies for your specific situation. But now you know what questions to ask, and that's what separates winners from everyone else.